Welcome back to the effect on the accounting equation. We're doing the next version of this activity where we need to write what the source document is, what is the first book of entry, what account will be debited, what account will be credited, what the amount is, and how does it affect the accounting equation. Remember, the accounting equation is assets equals to owner's equity plus liability. And we're using the same exact transactions that we did with our previous exercise, so we can see what the difference is here. Okay, so our number would be the date. Okay, so number of transaction. So we have here number 1. Then we have our source document. What source document are we using? We are using receipts. So using receipts. Book of first entry would be cash book. Okay, and now we need to find out which account do we debit and which account do we credit. So we are receiving cash. So cash is increasing and cash is a debit. So it asset. Cash is an asset, so it increases on the debit side. So we have cash on the debit side, and our capital is also increasing, and the capital increases on the credit side, which means capital would be our credit account. Okay, what amount would it be? $50,000. Assets is increasing and owner's equity is increasing. Then we are at the second. We are using deposit slips. So we're using a duplicate deposit. Remember, the original is kept by the bank and we are getting a duplicate deposit slip. Okay, what is our first book of entry? It would be a cash book. Okay, now we need to figure out what account will be debited and what account will be credited, right? So we know both accounts here would be one bank and one cash. So both are assets, but one is decreasing and one is increasing, right? So the bank, we're depositing into the bank, which means the bank would be increasing. And we're getting our money from the cash, which means cash would be decreasing. And that would be with $45,000. Our transaction here would be plus and minus. So both assets will be plus and minus as they are increasing and decreasing. Then on the third, we have bought land and buildings and paid EFT. So what would be our proof of payment? Our proof of payment would be, or our source document would be a proof of payment. Okay, our first entry would be a cash book. Okay, then we need to see we bought land, so our fixed assets increased, but our current assets decreased because we used up the money. So both here is assets, right? So what increased? Our fixed deposits increased. So our land and buildings increased. Okay, and what decreased? Our cash. Is it our cash? No, it's our bank. Bank decreased. With how much? $15,000, which means here we also have a plus and a minus on assets, as the assets have decreased and increased in the same time. Then we have number 5. We have paid trading license cash, $200. Here we do not have any source documents noted, so we'll leave that open. We have a cash book, which is our first book of entry, and here we have something we need to figure out. So paid trading license cash. So our cash definitely decreased, which will be at our credit side, so cash. Okay, and then we have our expenses. Our expenses has increased as well. So our expenses have increased, so that's why it needs to be on the debit side, and that would be for the trading license. Trading license. How much would that be? $200, which means our assets decreased and our owner's equity decreased. Okay, then on the 8th, we have a purchase goods and paid EFT, so we have proof of payment as source document. Our first book of entry would be cash book. we have purchased goods. So something will increase and something will decrease. Our goods would increase, so our current assets will increase. So we can say purchases increases and our bank decreases with $3,000. And here our assets increases and our assets decreases. Okay, then we have our next one, which says it's our cash sale of goods. Okay, on the 12, we have cash register roll. So cash register roll, cash book is our first book of entry. Then we have cash sales, so which means our cash went up, but our stock went down. So our cash went up, our stock went down, but we can also say that our sales went up as well. Okay, so which means our sales is our capital, remember, or our income. Our income increases on the credit side. Okay, so and our assets also increase on the debit side. So cash would be increasing on the debit side, and our income, which is our sales, would be increasing on the credit side, and that would be the amount of $4,500. And here our assets increase and our owner's equity increases. On the 16th, we have a drawing that's happening, that we do not have any source document, but our first book of entry would be cash book. Account to be debited would be capital, because capital is decreasing on the debit side, so that would be capital. Okay, and then assets as well, because assets decrease on the credit side, so that would be cash. And how much was that? That was $1,200. Assets decreases and owner's equity decreases. Okay, on the 22nd, sorry about that. On the 22nd, we have paid water, electricity bill, so we know there's a proof of payment used. Cash book is our book of entry. Cash book. Then account to be debited would be, remember our money is decreasing because we are paying water and electricity. So our assets are decreasing on the credit side. So that would be cash here. And our expenses are increasing on the debit side, which means that will be there. So that is water and electricity. And that would be for $1,700. Our assets are decreasing and our owner's equity is decreasing. Okay, and then on the 25th, we have paid insurance cash. There's no receipt there. Cash book. We have insurance. Hold on. Yes, insurance is an expense. So insurance. And we have cash decreasing. And the amount would be $300, and again, negative and negative. Okay, then we have our second last transaction. We have our EFT for salaries. So we have proof of payment. Cash book is our first book of entry. Salaries would be increasing in salaries, would be increasing at the debit side, and cash, not cash, sorry, bank would be decreasing, and that would be for $3,200. And then our assets would be decreasing and our owner's equity would be decreasing. Okay, then we have 31. Received debit card payment from a tenant for rent part of building, receipt number 2. So receipt used, cash book is our book of entry. What did we receive? Our assets increased, so our bank increased on the credit, on the debit side. And what did we use it for, or what did we get? We got rent. So rent income is increasing on our credit side. That is our income here. Okay, and how much with that? $500. And again, our assets are increasing and our owner's equity is increasing. So that is how we do another effect of the accounting equation, which you're going to do a little bit later. Please refer back to this video if you need more help. And yes, have a good day.